Howdy there, folks. Welcome into today's video. Real estate is absolutely screwed, okay? I want to react to this video here today. I want to show you a few things that are going on with mortgage rates, with the market in general. I want to share with you also, I have a home that has been for sale. One of my 3 homes, I've been trying to sell it this year. And I want to tell you exactly how much of a nightmare that scenario has been. Holy smokes, this ain't no jokers. I also want to share with you, I believe, real prices are down between 10 and 30% in a lot of the hot markets, in my personal opinion. That you won't see this show up in the numbers right now, and I'll explain kind of how I think about the real prices in regards to this, okay? Hope you guys enjoy this video. As always, I appreciate each and every one of you for joining. This channel, we are going to hit 10,000 subscribers probably today at some point, which is absolutely insane. So I just want to say thank you to everybody that subscribed to the channel. It is a lot of fun, and my gosh, I can't believe kind of the success of the channel so far. So I appreciate everybody for being here, okay? Alrighty, guys, let's get into this.
For the housing market, mortgage rates are on the move. And Diane Olick, they're not on the move yet.
No, they are not, Brian. After a really volatile week last week, here we go again. The average rate on the 30-year fixed jumped 23 basis points this morning to 6.25%. That, according to Mortgage News Daily. We saw some very wide swings last week, up to 6.23 and then back down a bit. But this jump up again today would seem to indicate that the 6% range is now the new normal.
And that's awful. Not only is this up on a ridiculous rate over the past few years, but we haven't been in the 6s on an average 30-year in a long time. Pull up your history books and try to go back in time to find the last time period. We were, let's say above 6 on an average 30-year. It's a long time ago.
And we were this high was back on June 14th, but rates came back down into the 5s pretty quickly in August. It was that jump, though, in June that really put the first brakes on the housing market, which has been weakening ever since. Rates did fall back, as I said, to just above 5%, but recent word from the Fed that's going to be more aggressive in putting the brakes on inflation is pushing bond yields higher and consequently mortgage rates higher. As a comparison, the 30-year fixed was at 2.95% 1 year ago today. So if you're putting 20% down on a $400,000 home, your monthly payment today is $680 more than it would have been a year ago. And
then this is just one of many reasons why this is such a huge deal, right? Because that knocks people out of the ability to buy a home, right? And this is on a $400,000 home. I mean, in a lot of markets, $400,000 doesn't get you very much, right? It depends on where you're at in the United States of America. But I mean, you're talking about nearly $700 a month. And a lot of people cut it very close to, what they can afford with a home as it is. So, and this is just a devastating thing for the real estate market, because it just knocks so many people out of the ability to even think about affording a home or buying a home,
that
right?
is not even factoring in that the same home today is much more expensive. Brian.
Oh, and by the way, try to heat that, Diana, because now you got $200 a month more in your heating bill.
You got it covered. You do.
There's, what is it, 680 plus 200, 880. Luckily, there's 0% inflation. Diane Olick, thank you.
So, the first thing I want to start out here with is showing you just how insane mortgage rates have gone. We're talking about 6% plus now. This chart isn't quite updated to where we're at as of right now, just so everybody knows. It will likely be up here, when this chart does update on the 8th. But, if you go back a year ago, where were we at? We were in the 2s. So it's really a shock and awe event in the real estate market, to be honest. This is the equivalent of a shock and awe event for real estate. When you're talking about a year ago, the average 30-year was under 3%. And now you're talking about the average 30-year for likely this week is going to be 6% plus. That's ridiculous, okay? Absolutely ridiculous. If we go back over the last 10 years, we haven't been this high in the last 10 years, okay? And remember, we're actually up here right now, okay? So that's something to keep in mind. We're actually higher than where this number's at here. Think about that for a moment, right? The last 10 years, I mean, can we go all? Okay, so we've got to go back to, where were we at? 2008-ish? We have to go back to 2008 to find the 30-year in the 6s. Think about that for a moment, man. Holy smokers, this ain't no jokers, right? And when it comes to real estate market, it's driven by a few things, okay? Before I get into that and sharing my story about how bad my home selling experience has been, I just want to show you guys this, right? You know, if you're talking about things getting devastated, it hits everything by the end of it, right? Stocks have been absolutely obliterated. NASDAQ's down 27% plus this year, which is one of the worst years in the last number of years. Like that, we're on pace for one of the worst NASDAQ years ever for the NASDAQ. It will, if things continue to kind of trend down over the last few months here, we're going to end up in a top 5 worst year in the history of the NASDAQ, if not a top 3 worst year in the history of the NASDAQ. Keep that in mind, okay? But it's not just that. It's obviously things like crypto, right? Look at what's happened to the price of Bitcoin. I mean, Bitcoin's down over 60% so far this year. What about something like Ethereum, the second biggest one out there, right? Ethereum is down 58% this year. So when it hits one thing, it hits all things, man. Nasty, 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 okay? Now, before I share with about my home selling experience, let me speak for just a moment on what really drives real estate prices. Confidence matters in a meaningful way. When somebody goes to buy a home, it's the biggest purchase usually for almost every single human being, right? So when they go to buy that home, they've got to be confident. Confidence is very, very low right now from consumers. Okay, so that's not good for real estate. Do they have a job? Okay, that's important. Well, the good thing is a lot of people have jobs right now. Okay, do they have the down payment for that particular home? And mortgage rates. That's what drives the real estate market, as well as inventory, right? So what's been going on in the real estate industry over the past, let's just call it 6 months or so, is inventories have been skyrocketing in most major cities. I mean, it's been a pretty big move up in inventories. Look at just about every single major city out there. You're going to see inventories have skyrocketed, okay? So have you seen that play out all at the same time while mortgage rates have gone absolutely through the roof and to, levels we have not seen mortgage rates at in 14 years? Think about that for a moment, right? And on top of that, a lot of folks are looking at the real estate market in general and like, I think this baby is coming down, so why do I need to go out there and rush to buy anything right now? And the problem is, if somebody usually wants to go buy a house, they also need to sell their house, okay? That's usually how it works for most people. But the problem is to sell your house in this market is very, very difficult, okay? Very, very difficult, and especially on a city-by-city basis. Now, in terms of my situation, okay, so I have 3 homes, okay? I have the one that's my main home here. I have a home in Arizona, and I have a home in Henderson, Nevada, okay? And I've been trying to sell the one in Henderson. It really has been kind of serving no purpose lately, and I've been looking to just kind of cash out of that one. So I put that on the market many, many months ago. Unfortunately, I missed the hot part of the market, and I staged the home. I spent 5 figures on staging the home. I used the best company, the premier company out here to list that home that does the best marketing, best photos, all those sorts of things. And, couldn't get anybody to really make a strong offer, okay? Then finally got somebody to make a strong offer. Then they ended up canceling. Okay, so back to kind of square one. Then couldn't move it. Drop price, big price decline. Say, okay, maybe we can sell at this price, right? And that's a home that I have quite a bit of equity in because I bought that back in it was either 2018 or 2019, I think it was. Yeah, either 2018 or 2019. So I had quite a bit of equity in this home. So I was like, that's fine. We'll drop the price. And I did a pretty big price drop. And even with that, still had a lot of trouble. Moving it, and not only moving it, but getting showings. And this particular home is in the premier area of Henderson as well. And in this particular area of Henderson, that's where people want to live in Henderson, right? So still couldn't move it. And then finally got in contract again. Then that contract fell through as well. And that's the sort of real estate market we're in now at this point in time, right? And so when I look out there, I think in a lot of the hotter markets, I'm talking Vegas, I'm talking Phoenix, I'm talking Boise, Idaho, I'm talking Austin, Texas. Any of the hotter markets in general, I believe real prices are down between 10 and 30% right now. Basically what I mean by that is if you went to sell a home at the start of this year, back in January, or a year ago, versus what you could sell a price at now, I would think you would need to lower your price at least 10 to 30% to even have the opportunity to sell. And I still don't think it's a guarantee in this market at all, okay? The bottom line, I look at these sorts of markets and I look at the different homes I own personally, and I'm like, dude, if I really wanted to sell one of these right now, I would have to drop at, minimum 10%, but I'm thinking honestly more like 20 to 30%. And then still, I have a lot of questions if those homes would sell in that market. Now, the higher mortgage rates go, the worse the situation's going to get, and the more devastated real estate will get for a longer period of time. If mortgage rates stay over 6, dare I say, if they were to climb to 7 for any reason, okay, which we'll see if that happens, but if that was to happen, I'm telling you, real estate would then not just be ugly this year, but it's going to be ugly next year in 2023 as well, and actually get worse in that sort of scenario. Now, this is causing problems in the real economy, in my opinion, and the higher mortgage rates go and the worse the real estate market gets, the more problems it's going to cause in the underlying economy, in my personal opinion. And the reason being is there's a lot of the folks that are employed by the real estate industry, right? It's just so many direct and indirect jobs. I've done estimates before that I think the real estate industry alone is probably 10 million plus indirect or direct jobs. It's ridiculous when you start going through how many folks make money on either a home being sold, a home being bought, or a new home being built. It is ridiculous how many jobs count on that, and how many jobs that produces in landscaping and so many different industries in the backyard, and the folks that do the landscaping in the backyard and a pool if you want a pool, or any water features or anything like that. And then when you go through a home and you realize how many companies make money off that, it's insane. And so I'm very worried that the home builders are going to have their new build contracts completely dry up. We're already starting to see that play out. Toll Brothers has told us in their last the conference call essentially that new contracts were down about 60% year over year. Okay, so that means somebody going to buy a new home and put it in an order 60% year over year. And with a Toll Brothers company, that's a company that deals with the highest end clientele, right? So if they're seeing that, imagine what the more, let's call them middle class home builders are potentially going through right now, right? And so this is where you get into a very bad problem here, where if the home builders continue to see their volumes dry up, they have this backlog that's filling all in basically the rest of this year and into really like Q1, maybe Q2 of 2023. But they need these contracts to start coming in over the next few months, because if these contracts don't start coming in, they're going to have, what are they going to have to build in the back half of 2023 at that point, right? As a home builder, you need to be selling in 3Q and 4Q of this year, so then those projects and homes can start being built in either Q1, Q2, or maybe at the latest Q3, but you should be able to start them in Q1, Q2, right? And then you have deliveries maybe in Q4 of 2023 or Q1 of 2025, right? 2024. So that's that sort of scenario, right? But if these volumes just keep drying up, they're not going to have those homes to be built in 23, which there's a lot of people that build these dang homes. There's so many companies that make money off that, which is there you get into layoff situations, right? And then you get into a weakening economy. And so this is why it's a funny situation we're in real estate right now, because on one side, it's kind of like you got the devil on each shoulder, essentially. On one side, we kind of need real estate prices to drop, right? It's not healthy with the rate that real estate prices were increasing. That's not healthy, because then people can't afford homes, right? And simultaneously, it pushes up rents to ridiculous numbers that people just can't afford. It's an ugly situation, right? But the flip side, if real estate continues to weaken and weaken and weaken, well, there's a good probability that a lot of folks are going to basically lose their job that build these homes and work for different companies that supply products for these homes, right? Because all these different companies that, do all these different things. There's a garage door maker, and there's the person that installed the garage doors, right? And there's the lighting people, and there's the electrical people, and there's the cabinet people, and the counter people, and the flooring people, right? And, all the people that got to transport all the products around. There's so many jobs that go into that if those jobs are lost, it does hurt the economy. And some of those jobs, pay pretty decent wages, you know, $20, $30 an hour type jobs. So it's not like they're, you know, I wouldn't call them low paying jobs or something like that. So that's where we're getting a really, really tough dynamic. And this is why on one side it's good that real estate prices are coming down. On the other side it's bad, because you're going to realize the worse the housing situation gets, the more likely we're going to see massive job losses in the real estate industry. And, you know, those alone could add up to hundreds of thousands, if not, dare I say, millions of jobs potentially being lost, which is a hurt for the overall economy, because then those people are out of work. Then they don't have money to spend out there other places. And it's just kind of like dominoes falling the wrong way. Okay. So real estate's in a very, very tough spot for at least the next 6 months, but could be into the next 12 to 18 months. And that's kind of that, guys. So yeah, hope you enjoyed today's video. As always, just trying to tell you guys, you know, kind of what I'm seeing out there and, you know, what I think's going on and things like that. Love to hear your guys' opinion in the comment section. As always, thanks so much for joining me. 10,000 subscribers on the way. Much love as always, and have a great day.